Atul, hi, morning. Can you hear us?
Yes, of course, I can hear you.
Okay, very well. Atul, what are we staring at? We've recovered 21% from the March lows, but I mean, is this really believable? Are we out of the woods, or is it? I mean, is it a bear trap? Is it a rally within a bear market? What are we staring at?
So essentially, what you see is that the mother market, which is the US, has seen a very sharp pullback. And I think that has really propelled global markets last week. So there is a lot of sync in the way global markets are moving. Individual countries, whatever be their incidence of the virus, etc., really do not matter at the moment. So what we are seeing is a kind of a global play. Last month, the 30% down was something that was witnessed across the world. Last week was a positive month, a positive week for the US, a very sharp pullback, and we saw that across the board. So what we are really seeing is a global play that is happening out. And interestingly, when March was the single largest FII sell month in history, the last week was about a 4,000 crore plus FII positive close. So what you are really seeing is a global movement of money. It's very difficult for us to say that, oh, the base is in place or things like that, because things are still very uncertain. See, there are two uncertainties. One is the virus, and second is the economic impact. As far as the virus goes, there are two things that play out. One is the vaccine, which we all know is a year and a half away. That's too far to play out. But in the short run, the search for an antiviral that works is the immediate trigger. So personally, I think that flattening of the curve, etc., is all buying us time. What is going to be a true trigger or a lasting base would be the need or the discovery of an antiviral that works. I think that is the first place which will give us confidence. At the moment, you have a market that's extremely oversold, having a pullback, and you really cannot set levels and things like that because things are very, very fluid. So I think for the markets, my reading that there is that the base or the first case of some positivity will be some antiviral that works. And we don't know, nobody knows, nobody has the answer, but the feeling is that it should be around the corner. So I think that's the first thing that will plan out. And post that, you will get confidence of the economy opening up in a phased manner. And it's then that we will really start seeing the implication on industry, space, sectors, and the overall country as a whole. So I think it's going to be 3 months of struggle, as I said, medically and economically. And we are going to have many legs, ups and downs, and we'll have to really keep the faith in equity, one, and more importantly, keep reallocating the portfolio towards the new reality. Because what is very clear is that post this COVID scenario, sector leadership, stocks, etc., are going to be different, and one will have to align the portfolio to the new reality. Just as there is pain, I think there's also opportunity, because the next big moves, the next multi-baggers generally emerge from such spaces. As I said, it is going to be 3 months of, as I think, volatility will persist, but here also is an opportunity. So I think it's not a time to be an ostrich and put your head into the sand. I feel that things are dynamic. One has to be sharp and alert, and hopefully things will emerge, and you would have a portfolio that is much sharper, much better, and participate in the pullback disproportionately.
The eternal optimist, Atul Suri. But Atul, so, first things first, you're not, denying that there could be a retest of the March lows or even lower, perhaps, right?
See, one doesn't know, Aisha, because the fact is that there are a lot of moving parts. You have to have certain solutions or some certainty somewhere. As I said, that this whole antiviral is something that I'm personally look at with maximum optimism and interest. But when it comes, and who knows when it will come. So you cannot say that the March lows will not be retested, or maybe that was a bottom. These are very, 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 very fluid times and the kind of moves that are happening. But for me personally, the benchmark or my lighthouse or my beacon is what's happening to the US. I think that is the mother market by virtue of its size, by virtue of its role in global economy. And I think that we will be more, our shorter term directions will be more uh, as a function of what is happening there. And in the short run, I think that you are seeing a very oversold rally. And I know the screen is red right now, but I personally think that globally, after this big sell-off in March, markets will see a bit of a pullback. We saw that last week in the short run. The important thing is that incrementally for us to take out new levels and things like that, we will have to see progress in the ground. And I think the ultimate end game is ultimately going to be a scientific breakthrough. Otherwise, all the social distancing, etc., is just elongated or giving more time to science. So I think science and scientific breakthrough will be the defining moment for us to come out of this crisis. Levels, etc., will play more a function of what's going to happen.
You know, we were just chatting with Chris Wood as well, Atul. I don't know if you managed to catch that conversation or not. And he seemed pretty alarmed about forbearances or moratoriums getting extended. And he warned against private banks and also said that there could be delinquencies then eventually even in personal finance groups. Do you think that concern is valid for the Indian names as well? Are the charts and the prices telling you that it's problem area for private banks selectively and some of the personal finance companies as well, or consumer finance companies as well?
True that, you are seeing that in the market. Banking as a sector is a centerpiece of Indian markets by virtue of its weightage. Even in the pullback you saw last week, you find that the Nifty took out the 9,000 high, which was a bit of a resistance. And I think it's a very important area for the next few days in the short run. But Bank Nifty could not make those moves. So definitely the leadership sector, or the sector with the highest weightage, is going through a bit of a problem. And that is going to be reflected. Now, the thing is that your PSU banks and your corporate banks and a lot of the SMEs, etc., have been quite battered already. What stands out or has stood out are the few quality private banks, private facing banks, and some NBFCs. I think that the pain is coming there. And that is what is really putting the pressure on the Bank Nifty. So yes, a sector of leadership, a sector which was the highest weightage, seems to be under a lot of pressure. And that is what really is playing out in the market as a whole. So certainly it is a problem area. How, when it will resolve, only time will tell us. But at the moment, yes, that is the red area that there is. And on the flip side, you find that to counterweight that, you find new sectors which have been underperforming emerge. We've all been speaking about pharma. We've been speaking about consumption. I think telecom is very interesting. And a good old specialty chemicals also, I think, continues to do well. So the emphasis or leadership seems to be moving away from banking. And that's the pain that you are seeing. That transition will have to be made in portfolios, because most portfolio managers' portfolios are overweight financials, and they were underweight pharma and telecom, etc. So I think you're going to see this kind of shift that's going to happen with mutual funds, PMSs, and that's what's getting reflected on the screen or in the market in the short term.
Okay, so Atul, overall, of course, still sounding positive on the way ahead. There was another report I was reading somewhere, Atul, which talked about how, perhaps it's always a good time to get into your small caps right now. When no one else is buying, make the most of the rally that's bound to come and get out. Is that something that you would even advise at this point, given the kind of uncertainty that still is overhanging at the moment?
These are times which are very special times. There's a lot of unknowns. You have to play it like, as they say in cricket, ball by ball, that's bowled to you. You can't play for a century right now. And I feel that the distress that you will see in corporate India, you're already seeing the pain, or you're seeing utterances from the best of companies which are sitting on liquidity, etc., etc. I think the pain in the small and medium cap space will be even more. In fact, the risk is a lot of bankruptcies that may happen in the MSME place. So I really would definitely not go out there. And it's, as I said, the environment is, there are a lot of unknowns. We don't know which sector will play out, how things will play out, what are the supply chains. So in the small and mid-cap space, one or two wrong decisions by the managements, corporates, industry, government can actually wipe out a lot of companies. So at this point, there's hardly the time to take risks. You want to play safe, you want to play with quality, you want to play with companies that have low leverage, which are market leaders, because when the dust settles, it are these companies that will rise. Because we don't know that the companies that will get trampled down, how many will be able to stand up. So I would definitely stay away from the small cap or very beaten down space, because I'm not really sure that how many of them will really survive after this turmoil settles down. I would stick to quality, I would stick to large caps, I would stick to debt-free companies, I would stick to market leaders.
Okay. All right. Thanks for that, Atul. That's the overall sense coming in right now from Atul